is I forget to actually like open up the extension where I can see the chat, which is like dumb. I should definitely do that before. And oh well. Let's see. I think it's under broadcast, and I go over here this little cog thing, and nope, that's not it. Geez, I really gotta figure this out. Well, at any rate, the big news is that the Federal Reserve raised rates again by 0.25% and left the door open for future rate hikes. The rate hike brings the Fed's policy rate, the federal funds rate, to a new range of 5.25 to 5.5%, the highest level since March of 2001. Wednesday's rate hike marks the 11th rate hike since March 2022 and comes after the central bank took a breather in June. The Fed said future rate hikes would be contingent on the impact of previous rate hikes on the economy and financial developments. We get a little chart from from Yahoo Finance. You can see big push up, huge. This is like pretty crazy. You can see rates were cut very aggressively during the 2008 financial crisis, like save the economy, please. And then, well, now we're reversing that, and rates haven't been this high for a very long time. This obviously will have an impact on equities because, of course, now it's much safer to invest in bonds, which are going to have higher rates, right? Let's go ahead and talk about what this does to the charts. Of course, whenever we get an FOMC meeting note release or we get a press conference from Powell, we get these big pushes in SPY, and it's like almost like the stock market opens all over again. You get a little blip in volume. You get a big move. Very sideways through here. It looks like we're starting to take off. I wonder if there's like a news feed in here I can pull up to. Yeah, it's just saying that might raise rates. We'll see if Powell says anything that really moves the markets. We're going to wait a while here to determine whether or not we're really going to move in for like much stronger highs or if we're still topping out. I personally think we're still topping out. Implied volatility here is dropping as price is moving higher, but sometimes SPY does that while it climbs. We'll zoom out a little bit onto the daily here. What I really want to do is go into SPX. I want to update my SPX analysis because it's time to address it. We broke that channel, didn't we? And we had bullish reversal confirmation at 4,179, and price has ran since. We've definitely reached this first target. The question is, do we get to the next target at 4,826? And the answer is we actually very well may get that high. Very well may. And it just depends how we count this correction through here. I'm looking for this is a super cycle correction, wave 4. Which I'm supposing actually isn't over yet, and we could still see that come down to this trend line near the low we set in 2022, which seems crazy given how everything's going. You know, I pointed out the inverted head and shoulder pattern through here, and this triangle, and the symmetrical triangle target at 4,470, like, or what would it be, 47,000 or here, wait, 44,070. Sorry, it was a SPY target, so I'm like trying to figure out what it'd be in SPX. This is that target here on SPY. You can see that triangle, 447. But really, are we in a new bullish motive wave heading to an all-time high, or are we not? We could be. If we are, then super cycle wave 4 in my SPX analysis has completed, and you're going to see that I only have wave A labeled. I'm going to keep these corrective and motive wave annotations on the chart. And the reason why I do that is because they could just be expressing extensions of something that's not apparent yet. We could be in a wave 5 right now. Like this could be the bottom of 4, in which case this A becomes C. And then I turn these A, B, and C notes from the cycle degree into super cycle degree. But honestly, I don't think that's the most appropriate thing to do because these waves are really long. They're huge. And just the correction wasn't long enough in time length. This is a big chart. This is a really big chart. Let's go into a line chart really quickly here. And you can see super cycle wave 2 shown in blue started with the dot-com bubble and ended with the financial crisis. And that was a good 8 to 10 years, right? We didn't get a new all-time high in the stock market for a long time. This is the kind of thing I'm looking for. If we aren't getting this size of a correction now, then what we're doing is we're extending yet again at the cycle degree. But we've already had a very impressive third wave extension, which here's, can I just, you know what I'm going to do? I'm going to get rid of that, get rid of that. I'm going to get rid of this. There's cycle wave 2. It's very small. 1, 2. This could be all 3, 4, and 5. To get another extension through here would just be insane. It'd just be wild. We did touch oversold on the RSI here, so that could signal that we are at the end of a corrective trend down. If we turn down now, while the RSI is at 70, this would indicate we're at the end of the next trend in the corrective wave. That would make the most sense to me. We're topping out now. We'll see this reach overbought. Maybe we overshoot 70 a little bit, and then we come back down and we finish wave 4. And it should last a long time. It really should. If it doesn't, I would be shocked. I'd be shocked. Really, I'm looking for a sideways grind through here with some pretty impressive lows. If we get super extensions, like, you know, we could really come down all the way down to this gray uptrend through here. This is like the great uptrend. I'll zoom out again. This thing starts way, way back in 1932, finding that high in 1937, and uses that next valley, or close there too, to start that channel. And you can see how price moves throughout the decades, moving between these different levels. And as we go through these different levels, I have my motive waves counted through here, and I have some other notes about the wave extensions and their tendencies. And it's important to note too that I based this whole count off of Frost and Precher's count figure, which is seen on page something, I forget what the page is, but it's figure A13 in this book. And so at least it is somewhat correct. It started off in a good spot. The count they provide in that book is outdated, so you kind of have to do your own analysis from the ending point of their analysis onward, which is of course why I have this going. I really feel like this is a bear market bounce still, but it could also be motive wave 5 at some degree. It could be super cycle 3, super cycle 4, and super cycle 5. But it's just too short. It's too short. Nonetheless, rates going up now is bearish for equities because it's going to be more expensive to get money to expand business. We'll start to see that in a while. Companies that issue debt to finance growth are probably still using cash from past debts or starting to roll over the maturities. It's when companies stop borrowing to grow, that's when we'll start to see the economy retract. And that might take a while. It really could take a while. And it could be a very long process. And the economy may overall stay quite strong through that period. And then we'd get these very mixed sorts of signals in the stock market, I think. Be very, very confusing. Now, I'm going to try to get the chat open here again because I just keep forgetting to do it before. Very annoying. I'm going to go over here into my plugins. It's not in here. How come I don't remember how to do this?